I'm Catherine Ross, and I'm here live from the NYSE. Jim Cramer's off this morning, so filling in is Jeff Marks, Senior Portfolio Analyst for Action Alerts Plus. Jeff, it's obviously been a very volatile week in the markets. Going into trading Friday, what should investors be doing?
Well, look, I think you got to just kind of keep the same plan that you were doing all this week. You know, very volatile, but as long as you have some cash on the sidelines, you should have been putting some into work when the market was down. Now, obviously, today there's a little bit more animal spirits in the air. People are kind of recognizing that the consumer is really healthy, and that Nvidia Quarter last night, the reaction to it is also might be inspiring some animal spirits into today's market. So it's a risk-on attitude. So that's what we're seeing today.
Now, I do want to talk more about Nvidia's Quarter over on Action Alerts Plus, but I want to get your top takeaway from Nvidia's Quarter.
Yeah, I really liked what I saw from gaming. So again, it was a much more healthier trend than what we were seeing the last couple quarters, where they had that kind of crypto inventory channel issue. But it was an acceleration, really strong quarter over quarter, and there's a lot to look forward to in the second half of the year. You have production ramping for the Nintendo Switch. You have some China gaming trends a little bit better. So I think seeing that the gaming market sort of work more into Nvidia's favor and expectations that it's going to accelerate into the second half of the year. That's why you're seeing a lot of buying in the stock. People want to buy that stock before the acceleration really happens. So that's why you're seeing it up so much today.
Now, I want to switch gears because I have to ask you about General Electric. Everyone, I would assume, knows about the news there, which Harry Markopolos, who is the
Marco Polis,
there we go. So he came out yesterday with a 175-page paper on GE, accusing them of accounting fraud. Now, this morning we got Larry Culp, CEO of GE, buying 252,000 shares of GE for around $2 million. This is following a Monday buy of about $3 million of shares. Should this reassure investors? Because yesterday they were feeling kind of iffy.
Yeah, so I think my first reaction to the news yesterday was I was very astonished to see something like this come out. Obviously, GE has had its challenges, but to to make this type of accusation, and he was Marco Polis was very I guess he was very confident in his work, as he should be. He's done some very important things. But seeing some news last night, I'm reminded of a story back when I was growing up, just as a kid, and my dad took me to a Phillies game. Bryce Harper walk-off grand slam last night, by the way, in case you didn't see it. So I was probably maybe 8 years old, something like that, and we're going to a Phillies game. And my dad pulls up to a parking spot, sort of like somewhere. It was on on a ramp of at Veterans Stadium, the old Phillies stadium. And I wasn't I was 8, but I'm pretty perceptive to what's going on. So I said to my dad, is this like a legal parking spot? Like, how can we park here? It was right by the gate. And he turned around and he said to me, he goes, "Jeff, money talks, BS walks." And I've never forgot that. And I think that's kind of what Larry Culp did yesterday, right? Buying all those stock, buying that much of stock, coming out saying, defending his accounting, defending the liquidity that they have for long-term care, to the reserve build up for long-term care. He put his money where his mouth is. He bought the stock. So, as smart as the Marco Polis guy has been, with cracking kind of like the Madoff case, I think you almost have to go side with management in this situation, because he put his money where his mouth is.
And investors agree with that. The stock was up early this morning. All right, so I do want to ask you an investing education question. This morning, after a week of, as I mentioned before, volatile sessions, we saw the Dow up about 200 points pre-market. When an investor sees that, when they see the Dow or any indices up over, let's say 2%, or not 2%,
just any type of
major move,
huge swings, yeah.
What should they be doing?
So I think you have to look at it this way. As an investor, would you want to sell with the market down 200? Probably not. I think you have to look at it the same as, would you buy when the market's up 200? Probably not. You have to do the opposite thinking, right? You want to buy low, sell high, and selling when the market's down and buying when the market's up isn't really going to make you money. It's not a profitable strategy in the long run. So I think that's what you have to think, and that's why you have to stay opportunistic when things are down. But you also you can't be greedy, and you have to look to take some stock off when things are higher.
All right, Jeff, thank you so much for joining us.
Thank you.
All right, Jim Cramer will be back on Monday, and as I said earlier, we are now heading over to our Action Alerts Plus Daily Rundown show to talk about Nvidia and the other stocks that you guys are watching. You've got a lot of analyst notes this morning.
Yeah, a lot of analyst activity, some positive things, so we'll be sharing our input on that.
So all right, guys, head over to actionalertsplus.com. I'm Catherine Ross, and we'll see you on Monday.